Yo, what's up you guys? Welcome back to another weekly market breakdown. Today's video, we are going to take a look at the market from both a technical and a fundamental perspective. We are going to look at DXY, EURUSD, GU, USD CAD. And if you are new here, a sub would be appreciated as I provide valuable educational content on a daily basis. And I'm also the only person who answers everyone's questions on a daily basis. Now, let's start with the questions. Mr. Katleho Motaung is saying, thanks, you are the best. And I see you're posting on your Instagram, you at the beach. Yes, my friend, I went to the beach for the day looking for my payout there from MDP, which is a prop firm. Also, the whole controversy with my Forex funds. Some people did say it's my frozen funds, but they are in trouble with the regulators. But remember, the broker is being investigated, and the broker Traders Global Group belongs to my Forex funds. That is why my Forex funds is in the news, because why the broker that they use to pass these evaluations belong to them. There's not all prop firms that does have their own brokers. I do know my FTMO got their own broker as well. But a lot of the other prop firms, they basically use 8-cap brokers. So don't think now everything else is going to fall to ground. Adil saying, I never thought it literally meant non-farm employment. Yes, it means everyone except for people that works on the farm. Okay, so if NFP decreases, what it means for gold, because gold's negatively correlated with the dollar index. If the dollar index decreases in value due to the NFP, gold automatically increases in value. But I've made a full video on that. It's called Fundamental Analysis. You can go have a look at that video. I've made a full explanation, I think 45 minutes through there as well. Mek Doomza is saying, hi, Rolio, the Wealth Creatives merch, like the t-shirt, can we purchase it, or is it only for VIP? Unfortunately, I do not have VIP or VIP groups. I am in the process of coming up with merchandise, and I will be starting this coming week. Getting some people, some designers and all of that stuff to see how we can kickstart that event. Calm Soothand in Reeds is saying, what happened to the index when unemployment goes down? Does it gain value? That I've just answered just now. So I would advise you guys to go look at that fundamental video. You would understand it's so much better if you go through that video. TDM Noob Vspro saying, makes sense in theory, but how will I spot a drop or rise in interest rates? Again, obviously, if you want to trade the data before it gets released, go look at the CPI data, which is what I always say in all of the videos there. The best way to indicate, to dictate whether interest rates are going to increase or not is when inflation goes up, you can expect the Feds to hike the interest rates. When inflation goes down, you can expect the Feds to either cool down and not go as aggressive. Amokilani is saying, may you please do Euro USD. It's a pleasure, no problem. Next up, we are going to go look at some news. So I'm going to go dive a little bit deeper into this news tomorrow. We obviously had the NFP. Unemployment went up to my surprise. And they also got the highest jobs report, jobs added since since June last, if I'm correct. Now, I want you guys to focus your attention on this paragraph over here. It says here, following the release of the non-farm payroll data, the CME's group watch Fed tool, so traders have priced in a 93% chance of the central bank holding rates at the current levels. Now, remember, when the Feds does not hike the interest rates, it basically means here you can see it is expected for the Fed to not hike the interest rate on the next meeting. When the Feds does not hike the interest rates, that tends to mean a bad thing for the index, because that means there is no movement. Okay, so we're going to go based off that bias, and we're going to use that information and expect a weaker dollar going into this week. We obviously got CPI. We can always look at the CPI coming through once again. And then we do have the Federal Reserve interest rate decision. They are coming through on September the 20th. But the bias for the index is going to be berries this week. And if we do look at the daily time frame, you can see the market had reached a very strong level of resistance. Then you can see over here that the market actually came back to test it. The market also completed this equal low. Market went exactly as anticipated the first time and the second time here as well. Now, going into next week, I do expect the pullback on the index, and the market had printed this massive impulse. So after an impulse, you obviously expect a correction, and the best way to measure that correction, it's very easy. You take your Fibonacci from the low Okay, you take your Fibonacci here from the low to the high of the impulse. And we do have a 0.50% lining up perfectly with the structure. Now, the index might go slightly there and pull back, but that's because the market is waiting for the index to also go and hit this previous level of resistance. If you do go on to higher time frames, lower time frames, sorry, you would probably see that we had some price action taking place over there. Bias on Euro USD because we expect a weaker index. I do expect a correction over here. The market is currently back to test this previous level, and you can see over here, if you just go lower, the market never closed below this level. Very important to keep in mind that we could see a liquidity swipe over here first, right? A nice liquidity swipe, and then we can expect that pullback. But my anticipation is for the market to start the pullback. Remember, you need to follow the rules of the strategy that you paid for. I don't know if you paid anybody for a strategy, but you need to make sure that you follow some set of rules, because the market is very bearish right now. The best way to get into the market is to go on lower time frames and then wait for price action to develop bullish. Now we're going to use the same analysis here. We also have a nice impulse. After the impulse, we always expect a correction. Instead of taking the Fibonacci from the low to the high, because this is Euro USD, we take the Fibonacci from the high to the low, and we do have this structural level that is very important, that's lining up with the 0.382 that we expect the market to pull back to. I'm gonna say slightly lower and then move to, and then complete this move to the upside here as well. Next up, we have GBP USD. Completed this move as anticipated last week. For GU, I do expect a pullback here. You can see we have this pullback here, same impulse. We expect a correction, and if you do take the Fibonacci here from the high to the low, then we do have a 61.8 Fibonacci. Like I said, I expect a slightly lower move and then a continuation, a slightly move down, and then a rather aggressive move to the upside. We are going to take a look at some news that is coming through for the index. When I do the Nasdaq and the Dow Jones here, we had the market printed this nice move. Unfortunately, this can also now be seen as a nice head and shoulders pattern that we can expect the market to start this move to the downside too. Now, because this is USD CAD, we obviously expect this market to continue lower. What we have over here, the market is back to test a very strong structural level. So going into next week, I do probably expect just a slight pull up, then a pullback, and then from there we could anticipate this market to even continue lower. But because this is the first point of reference, we do expect the market, we do anticipate the market to go there, all because the news says so. Sy gaan over my say, but DJ Coach said it's about no, it's fine. You don't have to do it. I'm telling you, if you don't want to listen, don't listen. Okay, I am telling you what's gonna happen. Right. Next up, AUD USD, and as always, AUD USD printed some very nice price action. Remember, the AUD USD is very much correlated with the stock market here as well. So it's very important that you keep your eyes peeled for this one. What we have over here is we got an impulse. We've got an impulse to the upside, the correction, and we do expect that continuation to the upside. Now, if you take the Fibonacci from the low to the high, we can see that we can still expect a slightly deeper pullback to the 61.8 and then that move to the upside. Now, why do I say the 61.8? Because I do anticipate the index, the index to go slightly higher. And because this is AUD USD, we do expect AUD to get slightly weaker against USD. Now, final thing, inflation. I was at the shop now and I heard someone say, how is it that the cost of living had increased so much but my salary stayed the same? I'll tell you how this worked. Most of you, not you, but the explanation that I was trying to explain to this gentleman was that what you see is that you get what's called inflation. Inflation is where the prices of food and goods and services, they increase. Then you get the value of the money that you have. Remember, sometimes your money, the value of your money doesn't always increase as quickly as inflation does. So inflation is going like this, your salary is going like this, but they are not moving at the same speed. Now, you know what's an even bigger problem? It's wage increase. So when inflation does this, inflation does this and your salary does this, so your wage increase is not keeping up with the rate at which inflation is moving. If your salary increase was keeping up with the with the rate that inflation's moving, then you would have still lived like some people did in the 90s. Unfortunately, your inflation's running away and your salary can't keep up. Okay, I hope that makes sense. That's it from my side. I'll see you guys tomorrow in another video, probably late tomorrow, because load shedding is back. Thank you for your time, and as always, cheers, videos.